Hello YouTube, Adam here with Livingston Financial. I have an awesome presentation for you today, how to get a perfect credit score, Credit 101. I'm gonna tell you all about what credit is, what credit scores are, and how to utilize credit to improve your financial future. Let's get started with slide 1. What is credit? Credit is the act of receiving value now and promising to pay for it later, usually with a finance charge added by the lender. When you borrow money in any situation, whether it be in the form of a credit card, a mortgage, a car loan, a student loan, etc., you are agreeing to pay back the amount you borrow plus interest. You might ask, what does it mean to have good credit or bad credit? Generally, if you have good credit, that means you have a historically good record of paying back the money you have borrowed on time. Conversely, bad credit means historically you have not paid back the money that you've borrowed on time. Credit scores are made up from information about your borrowing history, and this information is extracted from your credit reports. So what is in a credit report? Well, credit reports usually contain the following information: how much money you have borrowed, your required minimum monthly payments, your payment history, do you have any late payments or are you consistently on time? That kind of information is in there. Public records like foreclosure and bankruptcy, loans you have previously used, loans you're currently using, open lines of credit, and any loans in default or collections. Now, defaulting on a loan happens when you stop making payments after a set amount of time. Collections is when the lender sells your loan to a collection agency, and then those people tirelessly work to recover that money from you. Expect many phone calls throughout the day, emails, they'll stand in your yard and yell at your house till you come out, all that fun stuff. So why is your credit report important? Well, when a financial entity wants to lend you money, they pull your credit report to see if you have a proven history of being financially responsible. It's important to have good credits because you will get better interest rates when you decide to take out loans in the future. For example, a 30-year loan on a $200,000 house with a 4.5% interest rate will incur a $364,813 total cost with a monthly payment of $1,013. Conversely, a 30-year loan on the same value house, you're just gonna have a slightly lower interest rate at 3.6%. That's gonna incur a $327,345 total cost with a monthly payment of $909. As you can see, by having that lower interest rate, you're saving almost $30,000 on your house. Being financially responsible and paying back the money you borrow will only help you save more money in the future. Now keep in mind the same goes for having a better rate on a car loan. You'll end up paying less for your car, etc. Having good credit will help you spend less money. Credit bureaus. Credit reporting agencies collect the information that appears on your credit reports. These agencies then sell the information when you apply for a loan. The big three credit reporting agencies are TransUnion, Equifax, and Experian. By law, you are allowed to view your credit reports for free at least one time per year. When you do read your credit reports, remember to verify that all the information listed on them is correct. If not, you have the ability to contact these agencies and have them fix the mistakes. You don't want to pay an extra $30,000 on your house because some moron fat-fingered something on your credit report. Your credit score. Your credit score is an amalgamation of all the data in your credit reports. A computer program analyzes your credit history, looking for patterns and red flags in your personal finance record. Based on the data provided, a credit score is then calculated that is easy for lenders to interpret. Your credit score can range anywhere from 300 to 850. A great free resource to check your credit score is creditkarma.com. Sign up for a free account on there and you'll get your credit score within minutes. Here is a graph that shows all of the range of credit scores, 300 to 629. You're in the red, that means you're doing pretty bad. You're not paying back the money that you're borrowing. 630 to 689 says that you're doing a fair job, but there is room for improvements. 690 to 719 means that you're pretty good with credit. And then 720 to 850 means that you're doing an excellent job. Good work. When you log into Credit Karma, you will be greeted by your dashboard. On the dashboard, you will see your TransUnion and your Equifax scores. Here's a screenshot of the dashboard. As you can see, right here, I have a 763 TransUnion score, as well as a 763 Equifax score. And as you can see, I went down 3 points. How sad is that, folks? So next, you're gonna wanna see your open accounts of credit. So you can click on the accounts button up here on the front page, and then you're gonna see that hopefully all of your accounts are in good standing like mine. As you can see, that $234 open balance is from my credit cards, which are conveniently listed down here. My 2 Wells Fargo cards for $151 and $83. I have $0 in collections, $0 in student loans, and $0 in other loans until I get approved for my mortgage. Now that -3 ding you saw on my credit score is because I applied for a mortgage, and we'll go over that. So now I want to go over all the details that go into calculating your credit score. There are a variety of credit factors, and these are the variables that influence your credit score. Now you're gonna wanna pay attention because this is how you're gonna get your perfect credit score, by following these steps. The first credit factor is payment history. The most vital thing you can do to help your credit score, folks, is to make all of your payments on time. Having your payments be 100% on time, 0 late payments ever gets you 100. Now missing 2 payments, so let's say 2 months out of 100, that's gonna get you down to the yellow with a 98%, and having only 3 late payments out of 100 will get you into the 97% rate, in the red. So it is very critical that you make your payments on time. The next factor is credit card utilization. Your credit card utilization is the percent of credit that you're currently using of your total credit limit. As you can see, my total credit limit is $18,100. and I'm only using the $234 of that on my 2 credit cards, and that's gonna round to 1% of my total credit. Anywhere from 0 to 9% utilization is a great indicator of good borrowing. That 0 to 9% is gonna get you in the green. Even if you're using 10 to 29% of your total credit limit, that's still gonna have you in the green. But as you can see, once you get up into the 30 to 49%, that's getting kind of iffy. And then if you're maxing out your credit cards and just not making the monthly payments on them, it's gonna get you into the red really quick, and that is very much a bad look for lenders. The next credit factor are derogatory marks. Now, derogatory marks are super bad, folks. They can stay on your report for 7 to 10 years. Any long-term outstanding debt that has been reported to collections can be a derogatory mark. So it's best to be at 0, just like moi. Credit age is the next factor that goes into your credit score. And as you can see, this factor calculates the average age of all your open accounts. Now, this sucks for young people like me. I'm only 24, so my average credit age of all my open accounts is only 2 years and 7 months. So I hope that when you turn 18, you open 3 to 4 credit cards, use them responsibly, so by the time you're my age, you're gonna have a higher average credit age than I do, hopefully around that 5 to 6 year mark, maybe even 7 to 8 in just a couple years. Lenders typically like to see that you have experience using credit responsibly. Unfortunately, when you're young, not enough time has passed for you to have that experience. It's like with car insurance, you just gotta wait until you're 25. The next credit factor is total accounts, and lenders like to see that you've used a variety of accounts responsibly. Look at mine, I'm in the red. How sad is that? I have 4 open accounts and 5 closed ones, and that's gonna lead me to in the red, which is not good. So, highly recommended that you open up your accounts. I don't recommend that you go sign up for Kohl's, JCPenney, I don't know, American Express cards like crazy, take out more loans just to get to that number. It is lower impact. However, lenders do like to see that you've used a wide variety of credit responsibly. The next credit factor that goes into your credit score are hard inquiries. A hard inquiry is someone looking into your credit, so a lender might want to know your history of paying off loans. So they're going to issue a hard inquiry on your account and look to see what your history is. I applied for a mortgage and got 1 hard inquiry on my report, but I'm still in the green. As you can see, 1 to 2 and 0 will keep you in the green. But obviously, if you apply for a bunch of credit accounts all at once, that's going to seem risky to a lender. So, you know, if you have a bunch, 9, 5 to 8, you're going to be in the red. The good news is that hard inquiries are only a temporary ding, and your scores will usually bounce back within a few months. Here's a few general tips. Credit is a powerful tool to use in your favor, and building good credit is necessary to becoming a functioning adult. You're gonna wanna sign up for a sweet rewards credit card with a low annual percentage rate. And then you're gonna pick one monthly expense, whether it's gas, groceries, whatever you want, and you're gonna put solely on that credit card, that expense. You're gonna pay the balance in full at the end of every month, no exceptions, no minimum payments. Don't run up $400 and pay the $75. You're gonna pay the $400 on the 31st, no questions asked. You're gonna watch your credit score go up over time, and then you're gonna thank me when you're approved for your first mortgage. You're gonna be saving that $30,000 on your house, all because you watched this video. So you should probably press that like button. Then you're gonna wanna use those sweet rewards points after a while for a free vacation, go to the Bahamas, or better yet, you can cash them out as cash, transfer it to your checking account, buy a mutual fund so you can retire early. That's what I do. I have my rewards set to once it reaches $25 cash value, that gets transferred to my checking account and then I invest it. Highly recommend you do that. In conclusion, now you know the various factors that go into your credit score and the expectations that lenders look for to see that you are responsible with money. It is now up to you to grow your credit score over time. This won't happen overnight, but good habits created now will benefit you greatly over your lifetime. Thank you so much for watching this presentation by Livingston Financial. Please hit the thumbs up button to like this video, as it greatly helps my exposure and it brings the financial literacy to the masses. There's a new video posted every single Wednesday, and I want you guys to receive the most wisdom possible, and it's 100% free. So just hit subscribe and the notification bell. You won't miss any. Thank you so much for watching again. Have a spectacular day.